Good morning, ladies and gentlemen. Glad to see you all here with us today, and with all four Atlantic Canada provinces represented, and both NGCOA Canada members and non-member facilities with us today. I want to thank everyone for attending today's NGCOA Canada Atlantic Chapter's webinar. As you know, unfortunately, due to the COVID-19 pandemic, we're unable to host our usual annual spring warm-up events across the Atlantic province in the past month. The idea for this seminar or webinar is to try and help owner-operators navigate through all the recent government programs for small businesses and get some info on new programs offered by the NGCOA Canada. For those of you who I haven't met previously, I'd like to introduce myself. My name is Jim Thompson. I'm the Regional Director of the Atlantic Canada Chapter, and I'll be your moderator for today's webinar. A little background: before joining the NGCOA Canada in 2009, I owned and operated a 9-hole golf course for about 35 years, and I can certainly understand how some of you must be feeling in this uncertain time. Just be reassured that we at the NGCOA Canada are here for you, and will continue to support you and your business no matter what. So let's take a moment to go over today's agenda. As you see, we'll have a number of presenters on today's webinar, including our CEO of the NGCOA Canada, Mr. Jeff Calderwood, Riley Scott, our Director of GolfMax and Business Development with NGCOA Canada, and two experts from the KPMG Halifax area representing government financial help for small businesses, including Mike Power, who's the partner at Taxation Services, and Mark Parhill, who's the partner in the audit group. Just a couple of housekeeping items, if I could. Today's webinar is going to be recorded. In addition to the recording, we'll also be providing the entire KPMG presentation to everyone following today's session. So don't feel you have to take as many notes as you think. We'll send it to you. How the Zoom is going to work is quite simple. Right now, your microphone is muted. All of your cameras are turned off. We cannot see you. At the top right-hand corner, please be sure to set it up on speaker view. If you hover over the top right-hand corner of the screen, you'll see speaker view. Please just check that. Regarding questions, we received some questions in advance, and we have shared them with the experts at KPMG to help prepare for today's presentation. If you have a question during the presentation, and we do encourage you to ask questions, you can use the chat function at the bottom of the screen. If you hover over at the bottom, you will see chat. Please note that you will not be able to see everyone's questions, but we will be reviewing them during the presentation and asking them on your behalf as time permits. So please let us know if your question, if you wish to remain anonymous on the question, just say, please let us know that. So without further ado, let's get started. I'd like to introduce first of all, the CEO of the NGCOA Canada, Mr. Jeff Calderwood.
Thank you, Jim, and good morning, everyone. I'll be brief, but I did want to add a few remarks before we get started. Firstly, on behalf of the NGCOA Canada Board of Directors, I hope you and your families are staying healthy. From the beginning of this COVID outbreak, the NGCOA Canada has kept health and safety at the forefront as we navigate through the related business concerns. Those business concerns are significant, though, and perhaps the most serious disruption that the Canadian golf industry has ever had to deal with. So we've been almost entirely focused on COVID-19 support since that outbreak began. The solutions are not easy to accomplish, so I do thank you for your patience and your understanding as we work hard behind the scenes on your behalf. In general, I think our team has been doing very well in that regard, even though there's still a lot yet to be accomplished. Quick review: you've been receiving our COVID bulletins with important updates that are timely and interpreted specifically for golf operators. And for the record, we've done similar for each province, since the issues and the timing do vary across the country. A total of over 160 bulletins so far. So hopefully you're getting those and taking advantage of the content. Our website, ngcoa.ca, also has a COVID resource center where all relevant information is archived for you to access. Our private Facebook group has provided real-time peer-to-peer exchange of best practices and opinions for you, and it has been very active. Our staff team has been fielding over 100 golf course inquiries per day, looking for consultations and clarifications and so on as things evolve. We're also calling every single NGCOA member with an outreach program to offer any additional support that we can on a very personalized basis. And we're doing webinars such as this one today, provincially across the country. In terms of advocacy, the NGCOA did act quickly to develop comprehensive health and safety recommendations, and we've been persuasively communicating those to all government authorities across the country. Once again, leading with health and safety, but consistently positioning golf as one of the safest activities to comply with physical distancing and sanitary management. And then promoting all the benefits that golf provides, such as much needed exercise, mental stimulation, fresh air, etc., that you're all very familiar with. As you know, early on, we did accomplish the essential maintenance exceptions required in order to allow golf courses to be ready to reopen, province by province. And then our lobbying was shifted to ensure that golf gets positioned to be in the early stage as each provincial government prepared to phase in various business sectors. Throughout, we've been working closely with our allied association partners to present one consistent message, and the results have been pretty good under the circumstances. 7 out of 10 provinces committed to golf being in that early stage, and we're still working hard on Nova Scotia, Quebec, and Ontario to get those details finalized. I do want to close just by thanking all of you who have contributed to these various strategies. A special thanks to Mike DeYoung and our Atlantic Chapter Advisory Board, volunteering their efforts on your behalf, as well as Jim Thompson, of course, who have all put in some long hours to lead through the various complications of all this COVID impact, along with many others within our NGCOA staff team behind the scenes. I think I'll leave it at that for now. You're in for a very informative KPMG presentation today, and I wish you all the best for a healthy and successful golf season ahead. Back to you, Jim.
Thanks, Jeff, and I appreciate you taking the time today and sharing those thoughts. I'd now like to introduce my colleague, Riley Scott. Riley is the Director of GolfMax and Business Development, and Riley's going to run through some of the new programs, GolfMax suppliers, that can help your business starting today. Riley.
Thanks so much, Jim. As Jim mentioned, I'm Riley Scott, the Director of Business Development for the NGCOA Canada. And I'd like to thank you all for giving me a few minutes to talk. To start off, I really want to thank our 6 platinum partners that make events like today possible and really support everything that we do on a daily basis across the NGCOA Canada. So that would be Club Car, Integra, Moneris, Moosehead, Tion Golf Management Software, and the Toro Company. I think speaking to Atlantic Canada, I'd like to throw in an additional thank you to Vesey's Equipment, being the local Toro and Club Car distributor in Atlantic Canada. So, but these 6 partners really are in the backbone of everything that we do, and even more important in times like these where our advocacy efforts are so important, and the financial support that they give the association really make all of those 160 bulletins that Jeff mentioned possible. So just again, wanted to start with a big thank you to those 6 platinum partners of the NGCOA Canada. Moving on, I just want to walk through a couple GolfMax offers that have gone out again, really to support the COVID-19 pandemic and how our partners can help. So Club Car, if you haven't seen it, the Tempo Walk was released early last year. It's an autonomous caddy and a great way to encourage social distancing and give your members and your greens fee players something different to try on the golf course. So if you haven't seen it, reach out to the Vesey's crew and ask them about it. It really is spectacular. We had an event in February in Florida that we got to see these in action, and our members raved about them. So certainly give Vesey's a call. Secondly, Tion.com. Again, I'd mentioned them as a platinum partner. This isn't necessarily an offer during COVID, but a reminder of everything that Tion can do to support the best practices during these challenging times. So with Tion.com, the golf management software, there's online booking, there's online paying, you can check in online. Additionally, just launched at our national conference last year in Niagara, Tion now offers a food and beverage on-course offering right through the app, again, to promote social distancing. So again, certainly if you're looking at how you can roll out online ordering throughout these times, whether it's food or booking your golf online, certainly call Darcy or Tom at Tion. or reach out to Jim and we can get you the contact information. Deluxe Canada is offering 3 months of free payroll software. So I know the Deluxe rep out in Atlantic Canada is a regular at all of the events. Certainly during these times when you're looking at more remote solutions, fully web-based, you can run your payroll from anywhere as long as there's an internet connection. So Deluxe Canada, again, great support of the association. And then just quickly, Moneris, something that they did, this isn't necessarily just for the NGCOA, they did it across the board, but they automatically increased all of their TAP to $250. So if there's concerns about, certainly that is the best practice, is to not have to hand over a keypad. There shouldn't be anything required at your end, just reboot your system. And the TAP function on Visa, MasterCard, Amex, and debit will have a $250 increase, which is great to support our members. Lastly, we did roll out a couple opportunity buys to help, again, kickstart the golf season during these interesting times. First was with Falcon Golf. It's a touchless ball retrieval system. I have to commend the ingenuity from across the country. We've had some amazing members build their own touchless solutions, which is spectacular. We rolled this one out right away. The nice thing with Falcon Golf is this is actually about a 2-year-old product that they had designed for seniors, so that they didn't have to bend over and pick the ball up. And they ultimately created a spillway so the ball rolls out. So this isn't a prototype. It's been in the market for a couple of years, and certainly if you go to their website, you can order it right online. Use the code NGCOA CAN and get 10% off. Secondly, Kender's Water Solutions. It's commercial cleaning and disinfecting, really condensed versions of it. So it's super diluted. So you can get disinfectant starting at 75 cents a gallon, and all NGCOA Canada members save 25% off of those orders. So, a typical gallon is $150. Our members are getting it for just over 100. And that gallon is diluted down 200 to 1. So really great pricing for all the additional cleaning that's going to be required. And finally, Westkey Graphics and Exhibita is creating physical signage, sneeze guards, floor decals for our members. So if you go to our website, there's certainly additional information and contact details for Westkey. In close, from myself, again, I just mentioned, but all of this information can be found on ngcoa.ca through the COVID resource page. I encourage everyone to check it out, to echo what Jim and Jeff have already said. And certainly reach out to Jim Thompson or myself if you have any Golf Max inquiries. That's what we are here for. Jim and I work very closely together on every program that I build to make sure that our members are informed and are getting the best offers available. And to close, I just again want to give one more big thank you to Club Car, Integra, Moneris, Moosehead, Tion, and the Toro Company, our 6 platinum partners of the NGCOA Canada, for everything that they do for us. And again, in the support to be able to put on not only this webinars, but our webinars right across the country. So thank you all. I wish you all the best start of your golf season. And certainly if there's anything that we can do, don't hesitate to reach out.
Thanks, Riley. Appreciate that. And appreciate your efforts working with those suppliers to help members during this unusual time. And just a side note, those of you who are not members, there are a few on the call, and I appreciate you being here. We can certainly very easily justify your membership, and those on the call would I think, testify to that it's very easy for us to justify membership, even using one of these programs. So hopefully we can have that discussion. Just remember, going forward, we're going to move into our COVID-19 and our gentleman from KPMG. But remember, if you have any questions during this presentation, you can use the chat function at the bottom of the screen. Just type your question in. We'll try and get through as many questions as possible during the available time. It's going to be tight because there's a lot of information. And I will go through the questions and ask the speakers on your behalf. So now to the main reason that you've joined us for today's seminar, I'd like you to welcome the experts from KPMG. Mike and Mark, take it away.
Good morning, everyone. I hope everyone's safe and well. So we're going to go through a few advance it there, please, Jim. The slide deck. Great. The next one, please. Okay, so Mark and I are going to talk about the government programs that have been rolled out in regard to address some of the financial impacts on COVID. I'm going to concentrate mostly on the wage subsidies and a little bit of the tax filings, and then Mark will talk about some of the other programs that might be available to individuals and government loan programs and so forth. So as Jim mentioned, there's a lot of information here, but I'm going to kind of go over it at a high level. You can certainly ask some questions if you'd like, as Jim mentioned, but the slide deck will be available to you. So I'm going to start out with the wage subsidies. There's basically two programs. There's the temporary wage subsidy, the TWS, and then the emergency wage subsidy, the CEWS. So the temporary wage subsidy was the first one that was announced, and it's basically a subsidy of 10% of the remuneration paid during the particular period from March 18th to June 19th. And it's a subsidy that is a maximum of $1,375 per employee and a maximum of $25,000 per employer. So an employer is a corporation, a charity, a nonprofit organization, which many of you guys would have. And so it would be available to you. And basically there's no application process for this temporary wage subsidy. It's done by calculating the amount that you have available and reducing your remittance of income tax as part of your payroll remittance. So that's basically how you get the break on it. Now, you can't get the TWS and also the CEWS, and you're automatically deemed, if you qualify, and most nonprofit organizations would qualify, companies with taxable capital less than 15 million will qualify, you're deemed to have claimed the TWS for purposes of the CEWS, which means that you have to complete that part on the application form for the CEWS, even if you didn't even request the money. So under this program, but you will be reimbursed for it. So we'll talk about that a little bit later on. Next slide, please, Jim. So the main focus I'm going to talk about today is the CEWS, and this is a 75% wage subsidy that's available for corporations that are not exempt from tax, individuals and trusts, charities, NPOs, and partnerships. So I'm going to go over how the program works. So basically, you get a wage subsidy equal to 75% of the qualifying amount, and you have to meet certain reporting requirements. So basically, the way it works is that if you've had a reduction in revenue, and some of them, for this particular group, includes all revenues for the organization, whether it be from restaurants or green fees or membership fees or whatever. So basically, there's 3 periods: March, April, and May, and if there's a 15% reduction for the comparable period to March 2020, and the comparable periods are either March 2019 or the average of January, February 20 for the first period. There has to be a 30% reduction in revenue. Again, there's 2 periods to take a look at: April 2019 or average of January, February 20, and the same with May. So basically, it's the period in the prior year in 19 or an average of January and February. And the pay periods which it applies to is March 15th to April 11th, April 12th to May 9th, and May 10th to June 6th. So it's for work performed during those periods. So you might have payroll that overlaps, but it's actually work performed and paid for during those periods. Next, please. So basically, the program tests the measurement of a baseline remuneration, and I'm going to go through how the calculations work. But basically, it's 75% of what an employee might have been paid from January 1st to March 15th, and then you look at what's been paid after March 15th. So I'm going to go through a couple of the calculations. In order to qualify for this program, employees cannot be without remuneration for 14 days during a 4-week claim period to qualify. So they can't be without remuneration during that time. You can recall employees during that period. For example, if they were off work for more than 14 days and the employer wanted to get the wage subsidy, you can call them back. However, the employee would have to repay their CERB, which is the $2,000 a month that they may have applied for. This applies to all wages, whether you're a part-time employee or a seasonal worker or a full-time worker. So there's no restriction on who can be paid for. And wages, for purposes of this definition, includes basically all benefits that have been reported except stock options. Jim? So what is the wage subsidy? So the government will cover up to 75% of wages, basically to a maximum of $8.47 a week for 12 weeks. Okay, and it's eligible for wages paid from March 15th to June 6th. And so effectively, if you take a look at what's been paid during that period, they'll cover 75% of this maximum of $8.47. I'll show you how the calculation works. If there's any employees that are, just back up to one sec, sorry. If there's any employees that are related to the employers, I may not have that situation here, then in order for those related employees to qualify when they're paid, they have to have been on the payroll and paid between January and March 15th to qualify for the subsidy. Okay, so the calculation is basically calculated as this. So the subsidy is the greater of 75% of the remuneration paid up to a maximum of $8.47 a week, or the lesser of the remuneration paid, again, up to a maximum of $8.47 a week, or 75% of the baseline remuneration. So we're going to go through a couple of examples. So we got three scenarios here. So you've got the baseline remuneration, scenario one is 800, and the actual wages paid during the qualifying period is 800. Scenario two, baseline is 8, actual wages paid is 6, and then the baseline remuneration is 1,300, and the actual wages paid is 8. So here's the way the subsidy works. So if we take a look at scenario one, it's the greater of 75% of the remuneration paid to a maximum of $8.47 a week. So that's $600 under that scenario. And then under the second part, it's the maximum $8.47 a week, or 75% of the baseline remuneration. So again, because it's $800, $600 is the maximum because it's 75%. So under scenario one, the amount of subsidy is $600. Under scenario two, you look at the same thing. The amount we paid was $600. I think it was $800, but $600 was paid during the period. So again, you look at the amount that was paid during the period. Take 75% of that. That's $450. And then you have the remuneration as a maximum $8.47, but we're at $600. It's the maximum of what's been paid, or 75%. So you get $600 in that particular case. And in the third case, you've actually paid more. So 75% of the remuneration paid, you paid $800. And the actual amount that was paid in that third period is $800. But the baseline is actually 75% of the $1,300, so $975. So in this particular case, it covers 100% of the amount that's actually been paid. But that would really only be the case if your baseline would be more than the amount that's paid during the actual qualifying period. Next. So in calculating the revenues for purposes of determining whether you've had a reduction in revenue, you kind of look at what your normal accounting principles are in recording that revenue. There are specific things that have it that you have to take a look at. So revenues exclude extraordinary items like sales of real estate or something along those lines, or anything on account of capital. So it's really your recurring revenues that are coming from collection of dues, restaurants, and things like that. There are elections available for affiliated groups. If there's affiliated groups of companies that can provide for all the companies to qualify if the affiliated group as a consolidated basis qualifies. If you have a company or anything like that, you probably don't have these particular situations, but 90% are sales to an arm's length person if you had companies in the group. But that won't be applicable in most cases here, but they are available for that. And also the other one is you can actually use a cash versus accrual basis to determine your revenues. And if you use that particular basis, you have to do them consistently in the comparable periods and for the 3 periods that you can qualify for the subsidy. Next, please. So how do you claim these things? So the qualifying period are the ones that I mentioned, the 3 periods in the previous slide. So you actually file an application the things are all online now, and you make the application for those 3 periods. And they opened up on the 27th, and you have until the end of September to make the application. The forms are actually quite easy to fill out. You have to put in amounts that are paid per employee, and there's a number of questions that you have to go through, and then it actually has to be attested to by the individual has a principal responsibility for the financial activities of the eligible entity. So you really got to make sure that your numbers are right, because there is an attestation to that you could be on the hook for. Next, please, Jim. So there are penalties are pretty significant. So the penalties can include a 25% fine on any denying claim for that, and up to 5 years in prison for attesting to a materially inaccurate submission. So what they're trying to get at is that there's a lot of people that are going to take advantage of this in some way or another. So if you're stepping over the line, not preparing it correctly, or putting in things, and I don't think it's really there to pick up mistakes per se, but you have to do your homework and make sure that the information that's being provided is accurate. Next. So as I mentioned, the My Business account opened on April 27th. If you don't have My Business account, there's also a portal there that you can go through. So My Business account is something that you might have already set up your organization with, but as I say, if you don't have that, you have to apply for it, but there's a portal to get through there. There will be a separate claim for a refund of the employer's portion of CPP and EI for employees that are on leave that are being paid, but they have to be on leave. As mentioned previously, the 10% temporary wage subsidy that you're eligible for in the same period reduces the CEWS. So it'll be reduced by that 10%. So either you have to apply for the 10% TEWS, or you have to say that you didn't apply, and there'll be a refund of that amount down the road. But there is it's on Part F of the form that has to be filled out. And if there's any work sharing programs there, there's any EI payments under the work sharing program, actually it reduces the CEWS. So the input in the account, as mentioned, your salaries, the subsidy amounts, and the attestation. What's interesting here is that if you qualify for March, you automatically qualify for April. And then if you qualify for April, you automatically qualify for May. So that allows you to make hiring decisions and so forth. And you can hire back people to qualify for the wage subsidy. They have mentioned, the CRA, that they will publicly share information organizations. They can claim not so much, my understanding is the amount, but perhaps the names of the people. Next, please. The wage subsidies are expected to be paid out with 7 to 10 days from submission. So most of the submissions went in, like I said, just recently. So they should be coming in very shortly. Mid-May, it's next week. And the supporting documentation has to be on file for those employees, because they plan on there's going to be a lot of audits. They're thinking there's going to be close to 100% verification of some of this stuff. So again, make sure that the information is accurate and that you know the rules for this, because this is an important program. Next, please. Next one, please. And just for me, just some tax filing things there. So any corporate returns that are due after March 18th, but before June, are now deferred to June 1st. Any income tax installments that anybody that have to make for those people that are not nonprofit organizations that become due on or after March 18th and before September are now due September 1st. GST and HST remittances that were due on or after March 27th and before June are now deferred till June. Any customs and duties for anything imports, and there won't be any interest and penalties for that time. So there's a deferral of some of the filings and also the payments in regard to. So most of it might be for HST for you guys. Okay, now over to Mark.
I assume everybody can hear me. I'm going to be talking about other government programs and initiatives. If you go to the next slide. Okay. The first one is the CERB, or Canadian Emergency Response Benefit. It's available for employees, self-employed individuals, people who are sick or caring for sick individuals. This benefit is $2,000 a month for up to 4 months. And it's for people who have ceased work due to COVID-19. Effectively, it supports the EI program, and it's for anyone that's not eligible for EI and have been laid off. CERB was not designated to be issued with the, designed to be issued with the work share program, but does work with the Supplemental Unemployment Benefit Plan. We'll talk about that in future slides. You must have earned, in order to be eligible, you must have earned $5,000 in 2019 or the previous 12-month period. when you are collecting CERB, you can also earn up to $1,000, and it won't affect the CERB payment during the eligible 4-week period, each eligible 4-week period. Next slide. So the way the CERB and the EI work together, the applications for EI that were in process as of March 21st were switched to CERB just for the ease of processing and the large volume. Workers receiving EI benefits will continue to do so. CERB repayments, if people are recalled and they're going to be under the queues, as Mike mentioned before, there may be a CERB repayable if they're being put back to work. But the employees will have to pay that back. Workers and wages of less than $32,000 is kind of the benchmark. You're better to stay on the CERB versus the queues program. Previous slide. The EI program continues to operate in conjunction with the CERB. You receive one or the other. You cannot receive both. And while on a CERB, your EI eligibility is maintained. Go to the next slide. Okay, the Supplemental Unemployment Benefit Program. What this is you can increase your employees' wages due to, you can top up essentially the employees' wages up to a total of 95% of a normal working weekly earnings. These weekly payments is basically the sub-plan and the EI are added together and can be up to 95% of those weekly earnings. Payments under the sub program have to be registered with Service Canada and are not insurable earnings, so they don't affect the employee's EI benefits, and it also does not reduce the entitlement of CERB. Next slide. Under the Work Share program is applicable to private, publicly held, and nonprofit businesses. It's applicable where there's a temporary reduction in the normal level of business beyond the control of the employer. There's a 3-party agreement. There's an agreement between the employer, employee, and Service Canada under this program. The employees work by and paid by the employers and received EI benefits at the same time. It's applied on a work unit basis, so they look at it, and as your work fluctuates from week to week on the work sharing, you must report that on a weekly basis to Service Canada. This program is going to last for 76 weeks. Next slide. The Canadian Emergency Student Benefit was announced on April 22nd. Details are to come, or forthcoming, but essentially post-secondary students and recent graduates are going to be eligible. You must be, those students must be ineligible for the CERB or EI and unable to find full-time employment or unable to work due to COVID-19. The applicable period that is going to apply for is May through August. The benefit is $12.50 per month. If a student has a dependent or has a permanent disability, that can be increased to $17.50 a month. And this is going to be administered through Revenue Canada, CRA. There's various federal credit and support programs. The first one is the Canadian Emergency Business Account. This is an interest-free loan for up to $40,000 to small business and not-for-profits that had annual payroll between $20,000 and $1.5 million in 2019. If you repay the loan before December 31st, 2022, there's going to be a loan forgiveness of 25%, which is $10,000. If the loan is not repaid, the remaining balance by 2022, the remaining balance will be converted into a 3-year term loan at a 5% interest. The second program is a Business Credit Availability Program. It really has 2 parts. BDC has a co-lending program where eligible businesses may obtain credit up to $6.25 million. 80% will be provided by BDC, with the remaining 20% by your financial institution. EDC also has another program running in conjunction with this. It allows for the your financial institution to issue a non-operating credit for cash flow term loans up to 6.25 million, with 80% guaranteed by EDC to be repaid within 1 year. It's available to all businesses that were financially viable prior to COVID-19 outbreak, and therefore sorry about that. And therefore, the total amount of financing under this could be up to $12.5 million. Under the Canadian Emergency Commercial Rent Assistance, there's a 75% rent subsidy for small and medium-sized businesses, NPOs, and charities. The government will cover 50% of the rent, the property owner 25%, and it's for businesses that pay less than $50,000 a month in rent and have temporarily ceased operations or experienced a 70% drop in pre-COVID-19 revenues, where rents are reduced by at least 75% via the rent forgiveness agreement. This is applicable for the 3-month period, April, May, and June. The last financial finance credit support is the working capital loan. BDC is offering working capital loans up to $2 million, flexible terms and payments postponement for up to 6 months for qualifying businesses. And those are businesses that were financially sound pre-COVID and is in need of short-term liquidity financing. And it's a 3-year term, 12-month principal deferment. Next slide. So what are the lenders saying out there in this COVID-19 world? Lenders are focused on their existing clients. They're seeing companies draw down their draw down on their liquidity lines. They feel that everybody is going to be impacted. They're really focusing on their current relationships. They said in the midterm and long-term views is that prices are going to increase and the risk tolerance is going to be lower when looking at loans and amendments and waivers in the future. They're seeing there's support out there. They're seeing the support through BDC and EDC and seeing principal deferrals and marginally increased operating lines. As far as other lenders, alternative lenders, the bigger players have the more flexibility with regards to covenant and interest and interest only for initial periods. However, given the current conditions, and it's going to be difficult for non-existing clients to access this types of funding at this stage, they feel that these alternative lenders are going to play a bigger role in the future. Next slide. So what should you do as a business? Well, you should be looking at liquidity management. You should identify opportunities that stabilizes your business. You should understand and manage the business or working capital requirements of your business. You should consider your company's covenants and borrowings availability. You should do cash flow forecasting. You should do detailed liquidity forecasting models. Identify upcoming liquidity constraints to optimize decision making. And there has been a lot of stress on the system with applications for new loans. So the sooner you do this, the better, because it's going to take more time to get those through. Identify cost reduction opportunities. What direct costs, overhead, corporate costs can be reduced in order to reduce the cash burn and minimizing losses. Doing various scenario remodeling or modeling, reevaluating the status quo. And then stakeholder analysis. Identify your key stakeholders and associated risks with each party. Provide ongoing communication. Communication is going to be key in this environment, and to manage your message for business continuity. Next slide. So strategies for success. React swiftly. Approach stakeholders early. As mentioned before, delays in financing requests because of the volume that's going to be going through. So to react quicker. There's going to be high volumes of those credit applications at the banks. Be prepared for your financing requests, funding and waiver. Ensure you have all necessary documentation. They're going to be requiring forecasts of financials. Pinpoint any areas of vulnerability in the near term. And it's key to have open and honest communications with all these stakeholders. Do not underplay the current economic climate, and maintain strong relationships now with your business community in the future. And that would be it.
Hi guys, it's Jim speaking here. I do have a couple of questions, so let's maybe we'll get Mike's mic opened as well. First question is, our course only opens in late May and payroll starts on May 10th only. Can we still apply for the CEWS?
Yeah, so the pay periods that applies for them, the last pay period as it stands right now is from May 10th to June 6th. So yes.
Okay, perfect. And how can you automatically qualify for CEWS in the second period if you don't qualify on the sales piece? I'm assuming they're saying in the first period if you didn't do enough sales.
So the first period is a reduction of 15% in revenue. That's for March. The second period for April is a reduction of 30%. So, and then the third period is also 30%. So it's a reduction in comparison either to the prior month of 2019 or an average of January and February of 2020.
Okay, perfect. And now folks, if you have more questions, don't be afraid to send them in. I've got one here about a different one on the working capital loan. We were asked to sign a personal guarantee for 50% of the loan. We were told that this was a New Brunswick provincial government demand. Do you know anything about that on personal guarantees on this loan?
Okay, I guess I don't, so most of these loans are actually administered through the banks, right? So there's no real set thing that you can read on that. So I think it depends on the creditworthiness of the organization and whether they're actually requesting that type of thing.
So that's a banking question as opposed to a...
Yeah, like most of these ones, like I know for the $40,000 loan, which a lot of people have applied for, actually you apply right on the, right directly through your bank. And then the creditworthiness of all of these loans will decide what the security is and so forth on that. I'm not sure whether they're looking for personal guarantees or not. They may very well.
Right. I think the biggest question I'm hearing, and it's probably directed to both of you, courses are really concerned about those seasonal employees that they're coming in now. So is this the CEWS is probably the best way for them to go? Because they're looking at all these options and saying, I have to make sure my staff is happy. As you know, they don't want to be seeing a loss in revenue by coming to work, which has been a hot topic recently, but also that they're coming to work and they're comfortable. So in a nut, I know you've gone over this a little bit, but just in a nutshell. So if somebody's bringing seasonal staff, what should their approach be? And is it the CEWS?
Yeah, I mean, that would be mostly if they're coming. So what's interesting, I mean, I had a conversation with a contractor friend of mine who was finding it hard to get people to come into work because they were getting their $2,000 a month. So, I mean, they're going to have to look at if otherwise the employee is getting $2,000 a month, then kind of entice them back. It depends on whether they want to work or not. I'm not casting any dispersions on folks, but they can come if they want to work. That's the CEWS is what to use. It's there for seasonal. There for any employees. There's no requirement for them to be a full-time employee. They can be there for a month. It doesn't matter. It qualifies for that. The challenge is if some of the, like I said, if some of those folks are getting the CERB and they want to hire back, because you can't really get both. They can't receive a salary and then get the CERB at the same time. So if they're getting $2,000 a month, they could just sit home as opposed to going to work. So that's one of the challenges of this thing.
So we got a bit of a follow-up on that COVID working capital loan where they were asked to sign a guarantee. This was through the CBDC COVID-19 working capital loan, not the $40,000. Is that still through the bank?
Yeah, so the working capital loans are still through the bank. They tap into the government, like the EDC or the
CBDC. Yeah.
Right. So they go through the banks and they check the credit worthiness and everything else on that. So it's all through the banks.
Right. Okay, I'm just going to give it a second, see if there's any more questions, but I think that was, you guys got through a lot of detail in a short time. That was really well done. That's, I kind of questioned the guys and said, that's a lot of information. All right, it looks like we're good to go. I want to, first of all, thank you, gentlemen. Mike Power and Mark Parhill at KPMG in Halifax and based in Nova Scotia. It's important for our members to have information that is accurate. And we certainly appreciate the time, the effort, and getting your information to a timely manner. So if you have any further questions, as I said to the golf courses, we are going to send out a copy of this, but the exact info for Mike and Mark are both there. And please reach out to them, and we appreciate their time. Thank you, gentlemen. Let's move on. We're going to move on to something a little bit different. We sent out a survey. You may have seen it. Some of you completed it. Not everybody. I wish everyone had, but some of you have completed it. And I'd like to go over some of the responses and see what people are talking about. So these slides are quite simple, easy to understand. Will you change your green fee rates, for example, due to the COVID-19 measures? And most of you are going to stay the same, which is interesting. Some people thought there would be a severe reduction in green fee rates, but I think with the opening in Nova Scotia is another story. We have, of course, we are still waiting for Nova Scotia, but it looks like people are going to remain the same, and I congratulate you on that. I think that's a smart move. Your costs have not changed. So thank you for that. Thank you for answering that. I think that's an interesting. Will you change your cart rental fees? And again, very, very similar response. We're going to remain the same. Nobody's going to reduce their cart rental fees in this survey. So interesting point there. So if we're starting later than normal, are you considering reimbursement for a portion of the membership dues? Now you can see this one is a bit more of a split story. So no reimbursement, and yes, prorated based on other activities make a difference. As you see, the other is actually people coming up with creative ways to reimburse, and probably a value added or a different method of thanking members for being loyal and coming back. So a bit of a split on that one. Interesting. Number of events, and this is where I think the industry, as Jeff mentioned earlier, this is an unprecedented time for us as an industry. Events at your course, and if you're a golf course that counts on food and beverage and tournaments, are down over 25%. That's almost 80% of you said that was going to be down. So the industry is certainly reacting to that. The public, of course, has a built-up pent up aptitude or appetite, for golf. But it's going to start kicking in the event in June, for example, June and September, when your events may have been booked, that there's not as much going on at the golf course. So I'm sure you're looking at staffing and how you're going to handle that. We can talk about that in the next slide or so. Will you change your events cancellation policy? Most of you said no, but many of you are looking at ways to change that policy. There's got to be a lot of flexibility in this, as you know. You want to, of course, rebook that event, if not later on this year, but certainly next year, and keep that business. Do you have an online store? I think if you had asked this last year, the yes number would have been significantly smaller. People are starting to realize that online store is a very viable alternative, especially with the picking it up at the golf course, kind of the curbside or window delivery of clothing or golf clubs or that type of thing, as opposed to having a number of people in your store. So I think that's a precedent or a change that's coming. What best represents your online sales? The non-applicable is the ones who don't have a store. So you can see they're less than 10,000. Your online sales, a lot of that is also, I believe, is membership and green fee. So many golf courses are selling gift certificates and that type of thing, and being creative, which is the key. And times get tough, is to be creative. Will you contact your suppliers to discuss payment options? Yes, I can give you a bit more detail. I didn't put it on the slide, but what options have you discussed at the bottom? People are asking for extensions, 90 days as opposed to 30, flexible payment options. And of course, the suppliers are looking at that and saying, absolutely, they want to retain you as a customer. I think if you're not, I believe you probably should be talking to your suppliers, and they understand it as well. They want to keep you as a customer. We have a question here. Let me just see with the online store. Oh, sorry, that's a comment. Sorry about that. What do you estimate your gross revenue losses to be for the 2020 season? More than 30%, and too early to evaluate, I believe. I would assume that the more than 30% of the people who are very much food and beverage based and are losing events. I think the green fee, Nova Scotia, again, we don't know, but hopefully it's going to be soon. The other provinces, hopefully the golf season itself is okay. And, that would, I assume, be between the 11 and 20. It'll be a tough season on that. How will you make adjustments to your workforce? So most of you have reduced staff. I think that's a given. Hopefully, and with some of the programs available we talked about earlier, you're able to bring people back a little earlier than we'd hoped, especially maintenance staff. You can go to the next one, you'll see. Did you lay off any employees? Some did. Some had not been open yet or had not done any of that. So some people, between 11 and 20. And which operation? A kitchen, of course, customer service kitchen. Maintenance is a little surprising to me. I guess that's, bringing in 4 or 5 when the limits were the number of people, but where you normally would have had 10. But the kitchen and food and beverage in front of the house is going to be certainly a change. Were any of your employees infected? So there was some. Of course, that's not very many out of a small sample, but let's hope that stays. Let's hope we keep that number low and by using the best practices that we're providing you. And will you implement? This is just a really straightforward question. When you're open, will you implement best practices? And of course we will. You will see that they're very province to province. They are fairly easy to fall in line. We're hoping that everybody does fall in line and understands that we need to do this. There can't be any exceptions. Everybody has to follow along. So if you have any other questions, I encourage you to contact me by email or by phone. Just look up, we have all the contact info online. This is an ongoing situation, as we all know. And it's important that you understand that we're here for you to help you. And that's what our association does. That's our mission, is to support businesses, the golf business across the country. And it's important for you, whether you're a member or not. I certainly want to talk to the non-members about getting on board, but I encourage everyone to contact me. In closing, I want to thank my colleague, Mark Fraser, who's a technological wizard behind the scenes for today's webinar. And thanks for Mark. A big thanks again to Jeff Riley and our gentlemen, Mike and Mark from KPMG. As I said in closing, please know we're working hard to help your business, and please do not hesitate. I want to thank everyone. There's our contact info. Take care, and I look forward to speaking with you soon. Have a great day.